Welcome to the Crypto Layer HQ. Today I will be going over what Bitcoin is potentially telling us about the broader market and the liquidity cycle. So as we can see, Bitcoin is continuing to break down. We are now at 64.5K, potentially a leg lower to the 200-week simple moving average, and we could end up going lower, potentially finding support at 53K, since this was a major level that held back in this channel back in 2024. As we can see, it held and was respected many times. So this is definitely a level to watch. And if we do end up going to the 200-week simple moving average and potentially going lower, that will mean we have already had a 57% drawdown so far this bear market, and that is pretty significant. Now, assuming Bitcoin is a forward leading indicator for liquidity and the business cycle, what could that mean for other assets such as stocks? So for example, if we look at the S&P, it has now clearly been going sideways for a significantly long time. If we see back in October of 2025, we were essentially at the same price. So if we look, this is essentially like a distribution pattern. And what could end up happening is if we continue to fail at these levels, for example, let's say we end up having something like this, and then we just keep failing and distributing against these levels, and metals continue to run. Gold and silver, we can see silver is struggling a bit more than gold, but usually when metals start to run, it starts to mean there is uncertainty in the markets and people are running away from risky assets such as stocks and crypto, and they want to put their money in safer stores of value such as gold and silver. So the fact that gold is running could be telling us that something is broken and we could expect more uncertainty and turbulence coming up in the near future. What could that mean for the S&P? So if we do continue to have a distribution pattern, we could end up having a drawdown eventually. I would say the next level to see is potentially 6,100, since this was a major level here. So potentially that would be from the current levels, that would be a 11% drawdown, which is not too much and definitely happens quite often in the stock market. Another major level could end up being retesting 4,800, since this was the top before we had this drawdown back in 2022, and again the tariff drawdown in 2025. That would of course be a much bigger drawdown of from current prices. That would be a drawdown of 30%, which we do also get in the stock market. For example, back in 2022, we didn't get a 30% drawdown, but from wick to wick, we did get a 27% drawdown, which is pretty significant. And back during COVID, of course, we had a 35% drawdown. And back in 2018, we had a 20% drawdown. So 20 to 25% drawdowns happen every few years, and definitely 10% drawdowns, 15% drawdowns are more common. So we could end up potentially going somewhere into this region, depending how aggressive the drawdown is, if Bitcoin is truly a leading indicator and telling us something about the broader market, since we are having now a major drawdown. I do think if we do continue to head much lower, potentially if we do end up breaking below 50K and end up going to the 40s, I do think that would be a big major signal for what is to come in the stock market. If we do look at the US 2-year yield, this is often times where we can see the end of the business cycle. So we have been holding at this level, and if we do end up breaking below, we can see we could end up breaking below here and going lower with the Fed having to cut rates. If we do get a major drawdown in the stock market, we can see this could potentially be a similar pattern to what we had back in 2019, where we had this run up here and then come back here and then eventually consolidate and then break down. I know doing technical analysis on the 2-year yield might seem weird, but it is a pattern that does happen often. If we look at the weekly even, we can see that this has been a pretty major level. So if we do end up having to break below it, that could mark the end of the business cycle with potentially a drawdown in the S&P, which right now we could be going through the distribution phase, similarly to how we had a distribution phase in Bitcoin over 2025. We started to go essentially sideways and not having great returns. So that usually leads to a sell-off as buyers eventually get exhausted and they're not getting the returns they want, and they end up capitulating and selling to move to other assets such as gold and silver. Once we start seeing a drawdown in metals and gold eventually puts in a top, maybe we do end up making a higher high potentially, and then that could end up being marking the top. Maybe everyone gets very bullish again, and then we end up marking the top, maybe having a drawdown later this year, consolidating, and that could mark the end of the business cycle as people don't have anything else to rotate into, since once they start selling gold and going into cash, that means there's a lot of uncertainty and people are not willing to put their money at risk, and people are fleeing to cash since they feel there's a lot of uncertainty in the markets. So what usually ends up happening is markets flow from one asset to another. So of course there was a lot of money flowing into Bitcoin in 2023, 2024, and even 2025. And then eventually we got the bear market that started in Q4 of 2025. So a lot of that money started to flow into other assets, less risky assets, you could say, such as gold and silver. And then even money that was in the S&P, we can see has started to flow also into metals, since we haven't really gone anywhere since October of 2025, which is also when Bitcoin made its high back in October 2025. So essentially, since Bitcoin put in its top, even the S&P, we are still at the same price. So we could say Bitcoin essentially told us where the S&P is starting to form its top. Of course, it's very difficult to call when the S&P is going to have a larger drawdown, and people have lost a lot of money trying to predict crashes in the stock market. But I do think it makes sense to have some exposure to the S&P, but definitely have some cash on the side in case we do end up having drawdowns, since I do believe Bitcoin is potentially telling us something that is to come in other assets later this year, and Bitcoin has just managed to front run as it usually does. Similarly, in 2022, when the bear market started, it started in late 2021, Q4, in November 2021, and lasted most of 2022. We can see even the S&P, the top was in January 2022. So even back then, Bitcoin told us that we can see that Bitcoin put its top in, and then the S&P put in its top a few days later. We can see, not a few days, but a few weeks later, so 40 days later, the S&P put in its top. So Bitcoin had already had a massive drawdown, and the S&P was still making new all-time highs. And then 40 days later, the S&P put in a top. So essentially, if you saw Bitcoin have a huge drawdown and use that as a signal to get out of other assets such as the S&P, it was a great indicator to tell you what was expected to come. And of course, we did end up getting a large drawdown in the S&P, but Bitcoin led the way. Similarly, what happened in 2017, Bitcoin put in its top in December 2017, and then we can see 26 days later, then the S&P had a large drawdown, and then Bitcoin essentially was in a bear market, choppy, and then we can see the S&P also struggled and was in choppy territory, and did eventually have a larger drawdown in December of 2018. where Bitcoin also had a drawdown. But when you saw Bitcoin have a large drawdown, it was also a good signal to potentially take some profits in the S&P and stocks. So oftentimes Bitcoin can tell us what is to come in other assets. That's why it's a good asset class to keep your eye on, since once we start to get more major drawdowns like we've had now, and especially if we get even a bigger correction, potentially from the top, let's say we end up going down 60% and we're at 50K, that's a very big drawdown, which is most likely signaling something else about the rest of the market.